Good morning, trading world. It is July 11th, 2022, just after 8:40 a.m. on the East Coast, and this is my pre-market outlook and technical analysis for day trading the SPY. As I get ready to leave for my summer vacation, usually there is a summer wind down or slowdown, but right now it seems the market is saying the hell with slowing down. Last week we tested both the lower and upper ends of the market maker's expected move, and we did it in just a 4-day trading week. And to the close of last week, VIX was down around the 24 handle, and we are now back up to 26. In order for us to sustain this or get this big bear market rally that I'm looking for, the VIX has to sustain low 20s for a while. At that point, I will happily put on some bull call spreads in the VIX. The continued elevation in the dollar is telling me not to trust anything in the market right now. Even with the flimsy rally we have going, we could be back at lows in the blink of an eye. I was looking at a short on the dollar, but right now, just not feeling it quite yet. Maybe I'll revisit it in a couple days or after Tuesday. Let's see how things look after a couple days into the week. Let's continue to keep an eye on bonds as the equity market tries to go back to being the regular tail and not the tail that wags the dog. Continued selling in the bonds could mean more sell side activity in tech, which could hold down the entire equity market. As you can see right now, we have a bid in bonds, but last week we kind of trailed off, or actually for a few days we've kind of hit a decent sell move and kind of been sideways ever since in the bonds. But just keep an eye out to see if we resume that sell side activity. That could be very dangerous for tech. Continued selling in tech or continued selling in the bonds could topple tech over, and with tech pushing down, it could pretty much hold the entire equity market down. Now, I point all this out to show risk is still to the downside, and that if we do begin a possible sell-off and not just a pullback this month, we could hit a bottomless pit of risk. Now, from a technical standpoint, I see us grinding sideways to up, but the issue is going to be the thin order flow. We have the potential to hit air pockets at any time that could be the reset button for any up moves, and also feel like little mini flash crashes. So overall, summer is still very dangerous. I am still looking for a decent pullback to begin the first 2 days of the week, even though the weekly outlook is bullish, closing above the 388.67. With that, let me bring up the key levels to watch for the day. Alright, here we have the key levels of the day. Starting on the resistance side, we have our jack resistance at 387 to the 388 area. Queen resistance at 389 to the 391 area. This is going to be very, very important in here. If we make it back up here, this is going to be a level that we're likely to reject off of. And then we have our king resistance of 392 to 395. On the support side, we have our Jack support at 385 to the 384 area. Then we have our Queen support at the 383 to the 382 area. And then King support 381 to the 378 area. The main thesis for today is bullish, closing above the 388.67 with a projected target high of between 388 and 395. Our alternate thesis is bearish, closing below the 388.67 with a projected target low of between 385 and 379. The current major channel we are in is 379 all the way up to 397. Let's bring up the scenarios for the day. Alright, our first scenario of the day is going to be our expansive range day structure. We could look to set a decision area low boundary around the Jack or Queen support area before chopping back up and testing the Queen resistance area somewhere in here. And possibly another chop back down, and then possibly more up action during the overnight session. So that's our expansive range day structure. So we're going to look for some chop around this previous close represented by the blue line. Let's bring up the next scenario. Scenario number 2 is our trend day down. We can open gap down and start with a rise back toward the previous close represented by the blue line. We find resistance on or before that previous close, then begin our downtrend for the morning. We find midday chop around either the possible Queen or King support area. And again, today will be interesting to see how we interact at the close, whether we decide to rally into the close, because I do believe that this little pullback may take us into the first 2, maybe 3 days of the week here. And let's bring up the last scenario. Alright, our last scenario is our rounded reversal day type structure. We could get a continued push higher toward the Jack or Queen resistance area before spending the same energy we use going up to come back down the second half of the day. I also have to warn you about the vice versa on a day like this, which could see us continue lower first, find our midday chop around either the Queen or King support area, then the second half of the day taking off back up with the same amount of force we came down with during the first part of the day. So those are the scenarios for today. We want to be very careful with our risk, or what we put at risk. It's a very tumultuous time right now in the market. The air pockets are going to make trade very dangerous to sustain any bullish or bearish position for some time, because we could hit these air pockets, and like I said, it could reset any rally or anything we have going and almost feel like a mini flash crash. So be very, very careful of that. As always, the most important job as a trader is to protect your capital, and we do that by understanding and knowing our risk. With that being said, I hope this helps. Wishing you a positive trading day. Have a great one.